Today, I'm going to talk about 5 ways how COVID-19 will affect investing decisions. The pandemic has caused a sea change in the way we live our lives. After the dust has settled on the crisis, we might go back to our old ways of eating in a restaurant, going to vacations, and heading to concerts. Our memory is notoriously weak when it comes to learning lessons from the previous crises. However, there are a few things that could potentially change forever. Most of these trends were already in motion, but the pandemic might have augmented them. The first one is, of course, remote work. One of the biggest trends the virus has accelerated is the work from home culture. The pandemic has caused a massive spike in the number of people working from home. Many companies have now opened up to having a higher percentage of their workforce working remotely. This will save them costs like rents and leases as they have to accommodate for fewer workers. This will dampen corporate real estate prices and rents. This trend will negatively impact commercial mortgage backed securities or CMBS. If the work from home trend takes off, it will also lead to a decline in commuting needs, which will impact ride hailing companies like Uber and Lyft. It will reduce the number of trips for these companies, especially in the cities. The second trend, online payment and blockchain technology. Paper money is considered to be extremely filthy. According to Time.com, currency notes carry more germs than a household toilet. Currency bills are a hospitable environment for viruses and bacteria. These bills can be home for the microbes for up to 17 days. The coronavirus pandemic has caused people to avoid touching filthy things like currency bills. This seems to have expedited the switch to digital wallets. Technologies like near field communications, which powers Apple's digital wallet, Apple Pay, is likely to be accepted by more merchants. Other methods of online or digital transfer like PayPal and its global competitors will gain more impetus. Point of sale hardware provider and fintech company Square is also likely to gain momentum. As more people avoid using notes, the digital wallet sector will profit from the network effect. Payments processing giants like Visa and MasterCard may also benefit from this trend as emerging markets shift away from paper currencies. As you can see in the graph, non-cash transactions in India are estimated to eclipse cash-based ones in a few years. However, the outbreak of coronavirus has already accelerated that trend. Indians are increasingly using digital wallets like Paytm and Google Pay to pay vendors. Finally, blockchain backed cryptocurrencies like Bitcoin, which are decentralized, could also be in vogue over the next decade. This in turn will also reward semiconductor giants like AMD and Nvidia as miners use chips made by such companies to mine cryptocurrencies. Third trend, balance sheets. Global corporate and government debt have never been as high as they are today in absolute terms. As you can see from the chart, global corporate debt has nearly tripled in 20 years. Companies with large debt balances have been affected in past crises as leverage magnifies losses in recessions. However, companies with substantial debt and significant operating leverage, meaning companies with higher fixed costs, are being brutally punished during the lockdown. If companies make no revenue, all their expenses, including debt interest payments, become their total losses as the top line is negligible. Therefore, several companies have had to use cash from their coffers to fund these costs instead of their income. Debt has turned out to be detrimental for many companies and has led to several insolvencies already. For a few years at least, smaller companies may be wary of taking on more debt. This shock may have made them realize the effect of increasing debt levels beyond a point. People may also be more cautious about investing in debt laden companies. No wonder investors have flocked to stocks like Apple, Microsoft, and Google, which have an incredible cash balance that could source their current expenses for years. Even even if they lose a big chunk of their revenue as even if they lose a big chunk of their revenue in the coming quarters, the fourth trend is the switch to meat substitutes. Given how this pandemic started, the shift to veganism, which was already popular in Western countries, could be amplified. Beyond Meat, which sells plant based meat substitutes, could be one of the biggest winners even though it faces stiff competition from the likes of Impossible Foods. According to Statista's estimates, the market size of plant based meat products in the US is expected to reach $30.92 billion dollars compared to the 2018 estimate of $10.1 billion. Note that this estimation was made before the coronavirus hit us. The market for such products could be much higher given that the virus has expedited the trend. And finally, technology, especially cloud and software companies, stand to gain. As more employees work remotely, companies are more likely to transfer data and infrastructure onto the cloud. The biggest winners here could be Amazon, Microsoft, and Google, which have deep pockets. As work from home will require a better communications infrastructure, companies like Slack, Twilio, and Zoom will continue to benefit. Since all clerical procedures also need to be done online, firms like Workday, ServiceNow, and DocuSign could have a bright future. The work from home trend will also boost the upcoming transition to 5G wireless technology and all the companies related to it. The speed of data transfer is vital in remote work settings. Conclusion: the pandemic has led to a very gloomy outlook for the global economy, at least in the short to medium term. However, that said, those investors who try to think beyond the crisis and its fallout will be rewarded in the long term. Thank you.